Welcome back to the Clock Lab. Today we're introducing a new way to understand digital assets, not through hype, but through physics.
For years, crypto has been driven by stories and speculation. Our goal is to replace that with structure, logic, and measurable force.
Most people look at digital assets and see noise, headlines, emotions, and hype. But underneath all of that, every asset has a real function.
And once you understand the function, you can understand the force behind the price.
That's the foundation of our framework, Professor Clock 3.0. Every market is a system of opposing forces, a slow, deep force that comes from long-term conviction.
And a fast, reactive force that comes from short-term activity.
When these forces work together, the asset is stable.
When they fight each other, the asset becomes volatile.
This is market physics. Price follows force.
To measure force, you must classify the asset correctly. What does it actually do? What role does it play in the digital economy?
Our research shows there are 5 core types of digital assets.
These assets move value quickly. They act like bridges.
XRP is the perfect example. Its value comes from how fast and efficiently it transfers money.
These assets act like digital gold.
Bitcoin's value comes from long-term belief. It's slow, heavy, and stable.
These assets run applications. They are the digital computers of the crypto world.
Ethereum's value comes from activity, people using the network.
These assets govern protocols and capture cash flow.
AAVE's value comes from lending, borrowing, and interest.
These assets provide essential services like data.
Chainlink's value comes from securing the connection between real-world information and smart contracts. Our analysis showed XRP's intrinsic value is about $1. At the bottom of its cycle, price returned to that value.
And at the peak, price amplified that value, exactly as the model predicted.
Bitcoin's intrinsic value is around $28,000, but it also has a store of value premium.
That premium is real. It's measurable. And it explains why Bitcoin behaves like digital gold.
Ethereum's intrinsic value comes from 3 things: fees, ecosystem energy, and monetary policy.
And when activity rises, Ethereum strengthens. When activity slows, it cools down.
The era of hype-based valuation is over.
Function creates force. Force creates price.
And once you understand the physics, the market becomes clear. Price follows force.
And force follows function.
This is the physics of digital assets.
This conversation is for educational purposes only and not financial advice. Past performance does not guarantee future results, and investing involves risk.